This is Tom Cloud with this week's Precious Metals Market Update. The price of gold and silver dropping over the weekend. We've seen ECB bond buying accelerate as Europe is in a fix. And what has been going on for the past several months is we have seen U.S. Treasuries being bought, taking the pressure off of interest rates. And then all of a sudden, we're now seeing those U.S. bonds being sold, and we feel we're near the top of the U.S. dollar. But let me go back to the ECB buying bonds. They've gotten the same situation that we were in for the years we were doing the quantitative easing. Their bonds are not being bought by their citizens or investors from around the world, so they're having to print and buy their own bonds, which is pushing the dollar even further artificially high on the short term. So that is pushing gold and silver down in dollars, while gold and silver are going up in euros. So anybody in Europe is selling off their dollars, just like we did for 12 years, and that's a good thing long term, but certainly if you watch it in dollars, it looks like you're actually losing, quote, money, which is hard to explain, but I can assure you it's good that the Europeans are buying gold and taking it off the market because they're very strong hands. The other thing I wanted to mention is the data last week from the U.S. coming out and saying unemployment now is down to 5.5%. As we've talked about many times, if you make any decision based on government figures, I guarantee you, you'll get slaughtered, your investment will, in the end. All you got to do is subscribe to Shadow Stats by John Williams and see what the real inflation rate is, see what the real unemployment rate is, see what real job creation is, and not these fake numbers that the government's putting out. I mean, they're completely fake numbers. They have nothing to do with anything except trying to control markets and make you think things are better than they really are. And John Williams is not that expensive, but if you got any kind of money you're investing, you need to get into that and know what the real statistics are, or you're going to end up getting hurt, just like in 2008, and it's taken 7 years for the stock market to get back even. So you don't want to do that again. So you're going to watch that. The other thing I want to bring to your attention is the selling of U.S. Treasuries. It's now 3 straight months, Russia, China, and Japan, the 3 biggest holders that hold trillions of dollars, like $3 trillion of our debt, have sold off and had a net after buying those bonds. They're now selling them off, which leads many people to believe we're closer to a gold-backed currency in Russia and China combining to have a gold-backed currency. So we follow that very closely. It's a very important thing that many people don't talk about. But if we keep seeing Russia, but more in particular China and Japan, selling off our debt, it's going to be very scary when that bond market tops out. And I think it will be sometime this year. I'm on record as saying that I think the bond market will turn down after a 30-year bull market late in the year, and gold will be the biggest benefactor. His money will rotate to gold as big money managers move back to a bigger percentage or their first percentage into gold. The other thing I want to follow up on is I've had calls about my talk in Illinois, and the ones that have bought the DVD from compass.org is we have a correlation between the debt ceiling being raised and the price of gold. It's a 93.7% correlation over, since 1971, gold tracks the increase of the debt ceiling in the U.S. The last year and a half, it hasn't, because there hasn't been an argument in front of the people. So Obama's been able to raise the debt ceiling over $1.3 trillion without any attention being brought to it. Well, that expires on next week, on the 15th of March. And if the Republicans will get in and bring it a central point of us just printing money out of thin air, run it up, you're going to have a correlation back. Right now, gold should be at 1780 and not 1180 based on the 93% correlation between gold and the rising debt since 1971. People, it's not going to stay there. Gold is a bargain. Can gold go a little bit lower? Maybe. I don't know. But it doesn't make any difference. You're going to be wishing you had gold in there when it moves. You'd rather be a few days, a few weeks, or a few months early than a few days late when this thing moves, because the premiums are going to jump, the price is going to jump, and hopefully the Republicans will make this a major focal for the future of this country in raising this debt limit and just keep printing money and keep doing trillion-dollar deficits like everything is happy again. So this is something that I've gone into detail on my speech. And once again, you can buy it. It's very inexpensive by going to Compass, COMPASS.org, O-R-G, and order that DVD. It's important for anybody that's got money invested. Silver is back below $16. Once again, a gift. We still think it'll move back above mining costs by the end of June. So we're still looking at a 15 to 20% jump. So you need to just keep buying it. It's a gift to have silver down at this level. So while I don't have great news on the price movement, it's a great opportunity to add to your portfolio, or if you haven't invested in gold and silver yet, to get started. Palladium continues to be pretty flat, but has made this big move back up as the quantitative easing started in Japan and has protected the car industry, so that looks good. Platinum continues to look the weakest of the four metals, both technically and from a fundamental standpoint. If any of you need to reach me and talk to me, you can reach me at 800-247-2812. That's 800-247-2812. And if you don't have a precious metals IRA and want to have physical gold, silver, platinum, and or palladium in your portfolio, you can call us and we'll walk you through how to set up a self-directed precious metals IRA to own physical gold and silver. With this week's Precious Metals Market Update, this is Tom Cloud signing out.